Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 28th of August, 2018, getting on to 4:40 p.m. Central Daylight Time. Now, remember, tomorrow and the day after, so Wednesday and Thursday will be when we get more or less end of August trade, normal trade. Then it's going to die off sometime on Thursday, as a lot of traders are going to take off for the long weekend. Markets are not open on Monday. Please remember that. And then they come back Tuesday. It'll be one of these funny weeks because some people will extend their vacation until the weekend, and right after that, we're back to normal. Now, in the markets, you held on in the NASDAQ, the Dow, and the S&P to the gains, and that's good. The weaker part of it today was the Russell. Didn't really break that much. In the metal markets, while we have settlements here, the later quotes in the day were around 1208 in the gold at the end and around 1475 or so in the silver. Copper was down about 100 from here, and we were nicely lower in the platinum as well. Metals sold off. You were up a little in the euro, but I wonder if this 117.50 area and the dollar down at 94.34, are we getting to the points in those where you're getting too high in the euro, a bit too low in the dollar, and they start moving back? In terms of new news on a NAFTA deal, all that I can tell you is that we saw that the Canadian foreign minister arrived in Washington. Negotiations are there. The big news of the day is consumer confidence, and it is the strongest number since 2000. That's a heck of a number. It's 18 years, basically. And the consumer feels good, and why not? Things are moving on. You can see this in a weekly area chart of closes. The market is still moving to the upside very, very nicely. For the week, we're up 22.5 points on the S&P. When you take a look at what you see on the daily bar chart, you're starting to stall a little bit, as you can see there, holding on to the gains of yesterday, but stalling out a little, and we'll see why in a moment here. You've got the pattern of higher lows and higher highs. Until you take out 28.46 on the current pattern, the market stays bullish. When you look at the market, it's over the 18-day average, so pullbacks, if they fell, I would look for support as possibly being seen at that number. And no, that doesn't mean you have to go down there. The resistance, I can understand the stall. The market is now 2 days in a row over the upper Bollinger Band. These black lines represent the Bollinger Bands, and the importance of that is this. 5% of the time, the market will trade and stay over that upper Bollinger Band. Trade over it is the word. Settle over it, it's even less than that percentage of time. So when I get 2 days in a row, my rule of thumb is it gives a 3% chance. I count each one of the days over as one of those percentage points. 3% chance that the market will stay over that tomorrow. What it's really saying is, no, that doesn't mean a trend change is at hand. It means for those wanting to buy, there might be a better opportunity under the band. That's it. It means no more than that. What is important to me is that the market now has an embedded reading. An embedded reading means the two numbers, the red and the blue, called the K and the D lines, are both now 3 days or more over an 80 reading. That converts the market from being overbought to locking in a bull trend, and it stays that way until the red line does what? Closes under 80. When it closes under 80, the odds would favor price would try to get together with the 18-day average. It doesn't have to happen, but the odds would favor it, as I compute them at least. The NASDAQ is not in that situation. It's an overbought market, 2 days over the upper Bollinger Band. The fact that you had a breakout to new all-time highs and you were able to close the second day over it is a bullish sign, not a bearish sign, but still, I wonder if you can't do better on pullbacks and coming into the market. Dow Jones, the embedded reading is in place. First day, I believe today. Let's see what yesterday. I thought yesterday looks like it was also over the upper Bollinger Band. Today, the market over the upper Bollinger Band, or is it? Not really. If you look at the band, that number's 26,099. We closed back under it. So this market is paying more attention than the others. And the Russell closed over and today back under with an embedded reading. In plain English, until those readings are lost in the three that are embedded, you're looking for buying to show up on the breaks, and all you do is keep your eye on the red line, make sure it doesn't close back under 80, and that's what I'll be looking for. In the VIX, it's interesting. The market, you would think with the stock market up, the VIX would be down. It's not. In fact, if it gets over yesterday's high, which was 1248, you could set up a pattern here of higher lows and a higher high over that number. That would give an inkling that the market wants to rally, which fits in with my idea that you might want to see a pullback in the stock indices at this point in time. In the T-bond market, we were looking yesterday, and you could see the market had lost its embedded reading. Let me come to yesterday. You had lost the bullishness first. You had stepped to a pattern of a higher high, lower low. And today, once the market opened, I was showing it into my subscriber video, the odds were favoring that you were losing the embedded reading and prices would make a run to the 18-day average of closes, as they so often do. Same thing happened in the 10-year note. You can go back yesterday. Yesterday, at least, you had an edge because price and the 18-day average come together once you lose the embedded reading. The problem is the only day you can get back that reading is the day after you lose it, and if you hit the 18-day average again, it's rare that you ever gain it back. It has to go through the whole process. So what you have now is a market, as I see it in notes, that is bearish. Lower highs, lower lows, a close under the 18-day average. The momentum has turned down. Next stopping spot, if the market wants to break further, could be the 100-day average at 119.22. TLT lost the embedded reading. Lower highs, lower lows. The market breaks hard, gets to 120.68. That 18-day average is 4 cents away. You're knocking on the door of it already. In the dollar index, the reason I'm saying the dollar might be getting overdone, the euro too, is you're knocking on the door of the lower Bollinger Band with just an oversold condition. And if you come to the euro, if you look at today's high, you got to 117.50 and a half, and the upper numbers 117.63 and a half for all purposes. So I think this is offering a resistance area, the dollar offering a support. Not changes of trend, but I'd be surprised with the overbought and oversold conditions that you don't get something more of a correction. The pound has spent a long time coming up here, and it got up today to 129.43, did not take out the last high of 129.49. Now, you can see that high. Should this market break under 128.09 and not take that out, you could get another sell signal. Right now, the market is in a buy mode. It is getting into an area where if tomorrow momentum stays like this, it'll get overbought. Look for support at 128.50, and the bulls have to defend the market not to get under 128.09. In the Japanese yen, you still have a pattern of lower highs, lower lows, which is bearish. The bias is down, and I consider bias down if you close under the 18-day average, bias up if you close above it, and oversold. In the Bitcoin, it would not surprise me that price makes a run at the upper Bollinger Band. You're overbought, so I'd be a bit cautious up here. 72.50 seems to be an important number for a lot of technicians. I don't see it. I see that the upper Bollinger Band's more important to me. When we come to the October Brent versus WTI, the spread continues to move in favor of Brent. The logic tells me of that. The reason is the U.S. is getting more production online coming in again from now Canada. Remember that pipeline that was out there? We have our own good numbers that are here. And of course, you got to deal with Iran and the fact that lost production is going to take place in the Brent crude. When we go to the October Brent, you can see how the market is running against the upper Bollinger Band. A day over, two over, and then bang, right under. That fits in with the pattern. If you take out 75.40, you lose the bullishness of the market. Then maybe for support will be seen at 74.25. Overbought is how I'd view it. You had a reversal day in WTI crude. Lower highs, lower lows. That is not bullish. That puts the market now into a swing line that is turned down. However, you're overbought. However, the bias is up. In other words, a mixed chart. I'm going to look to see how the market, if it does break, and that's a big if because we get the 9:30 EIA numbers, does the market find support at the combination of the green, which is the 100-day average, and the red, the 18-day average of closes. The fact that it's overbought means I don't think buyers are going to show up yet anyways. In the gasoline, I can't be more clear. You know, I think the market's rallied in front of the last big driving holiday. And now when we get over the Labor Day holiday, who cares what gas is? It generally, the demand for it starts falling back a little bit. So I'd be watching that. I think today was a toppy area in the market. In the natural gas, I think the market is now getting into what we talked about yesterday. We're going to get into one of these sweet spots where the weather starts changing and you don't need heat and you don't need air conditioning, and you start building supplies of this. Now, they're already saying a mild September for a large swath of the United States, so I'd keep my eye on that. The market's down into a support and oversold, so I'd be paying very close attention there as well. You know, one of the things I want to talk to you about is our QT Market Center, and I've created an ad for you that watch the financial markets because I want to show you how this works just for the financial market stream. These are the S&P, the NASDAQ, all the different quotes on the stock indices. You come in, you get the last price, you can see if the market's up or down, how many contracts traded, the volume. You then can go on and look at your charts with any of the studies. I use Bollinger Bands and some of the others. They are on here, so you can plot those as well for yourself. You can always, if you have an account with us, place orders, and they'll go right on through. They should, unless your phone connection goes. You can set up price alerts, so if a price is hit, you get to see them and play with them accordingly, and I think that's important. And then you can work voice control and say things like, as you'll hear here, E-mini S&P chart. There's the chart. It'll come right on up with your voice command, which is a much better feature than having to do it any other way. Now, what about this?
September is up 2.25 and last traded at 2000.
Yeah. Imagine you're driving. You want to keep your hand on the wheel, but you want to know what the markets are doing. This just keeps looping and gives you the quotes as they're streaming right into it, which I think is a great feature. Then you get the different news. My different videos will pop up in there. You can go to our old look, and this was that. I have the new look. We left them both in there. And, of course, overviews. What about news? They're all there. All kinds of news stories, oil, every market you can imagine. To get it, and by the way, we make it available for this trial for free. Just give us a call, go to our website. You can see my videos and all. We'll make sure that all works for you. You're going to need a user ID and password. And how you download this, by the way, you can go to Android or go to your Apple store. Download the versions. They're both there. We'll send you the user ID and password when you sign up for it so that you can get in. And no, we're not going to ask you for a credit card or anything. You can click up here. If you're serious about trading and the season's here, can you imagine something set up for you just for your financial quotes, and you set up the ones you want? You don't have to go through 50 million quotes if you don't want to. The voice will play accordingly. I'm Ira Epstein. You have a good day.